Good morning, everybody. Welcome to the Flow Show. Here we are, another day one under the bridge, and a big day for you earnings lot to like to see what's coming. Nvidia earnings are going to be dropping, so that's going to get the stock market up and about, no doubt. Keep an eye on that later on. Morning, Kay. How's it going?
Morning, mate. How are you doing?
Yeah, all good, all good. Thank you very much. Let me just have a look. Just a note, Kay, that comment is
Yeah.
something. Yeah, okay.
Yeah.
Cool. Right, let's get on with the show. Going to start off, as always, over in China. The bum fight with Japan still ongoing. A Chinese diplomat was said to be disappointed with the outcome of their meeting with Japan. China's foreign minister says if Japan refuses to withdraw its remarks, and it's even continuing to make mistakes, China will have to take stern and resolute countermeasures. There's been a piece out already that they may halt Japanese seafood imports again. This was something they've done previously in other bum fights. And it said that they are suspending talks on resuming imports of Japanese beef as well. So this thing is continuing on and on and on. Should we be worried about it, Kay, or is this just going to be a bit of politics?
Takaichi already said that she wouldn't take it back, I think, if I saw that correctly. But there already been ships, Chinese ships turning around the Senkaku Islands again. I think if anything more would happen, I think that's where the most tension will arise. But yeah, I mean, I'm not not going to say it is going to get worse, but it's something that we should take note of. And there was this comment or question in the room yesterday saying that is US going to get involved in this? I don't know, but I'm with Trump being there, I'm not even sure which side he would take right now. So. Yeah, we will see. We have been there. We have been there before with those stress situations. But yeah, that Taiwan thing is not going away, huh? And it's still creating stress in the Chinese Sea there and everything, all the countries around.
Yeah, absolutely. So we'll have to see if it does blow up into something. It could be a bit of a hit to the economy if China really starts hoarding stuff and whatnot. So that's probably the main effect we should be looking for. Anyway,
Yeah, and
yeah,
another one where it's hard to buy in.
yeah, exactly. I haven't looked at what the Yuan Yen's doing. I'm probably got enough on our plate with what's going on in the yen, so worry about that later. Right, moving on to Japan. We've had a bit of data out and some positive numbers from core machinery orders, up a healthy 4.2%, blasting the expectations of 2.2% year on year. Good, strong, positive number as well. So good data coming Japan's way. We've had further stories pieces out, not real anything different in the rough numbers for this package. Kyoto reported that it's going to expect to exceed 20 trillion yen. They were having it exceeding 17 trillion yen the other day, so it's gone up a bit. They also say that the supplementary budget to fund the stimulus package is expected to be around 17 trillion yen. So we're still in that ballpark area, somewhere around 20 trillion gives the market something to aim for. Maybe a bit of a wide one, 20 to 25, something like that, but we'll wait and see the final numbers. Another one, or could it be one of the same ones, advisors of PM Takaichi says that the BOJ is unlikely to hike before March. Don't know if that's opinion or had some inside information, but who knows? Yeah, sorry.
Yeah, I think it's just the press rehashing that Kataoka opinion.
Possibly, yeah. Anyway, Finance Minister Katayama met with Ueda and their growth minister Kiuchi. They confirmed they're going to work closely. Now, this is the interesting part. They said they will not change the overall direction of the BOJ government joint accord, but will make a technical tweak to that accord. Also said that they have no objection to what BOJ's Ueda was saying at that meeting. Any idea what this technical tweak is, Kay?
Good question, mate. I don't know. Well, no. I really don't know what the technical tweak would be. Bank of Japan presenting or having a permanent government member sitting on in the meetings. We know that from time to time there's a government or MOF member sitting at the Bank of Japan meeting. Is there going to be a permanent one? In which case, that's yet another sign that they don't want the Bank of Japan to go too quickly, or at least the MOF being aware of whatever they're planning well on beforehand. That could be a potential tweak, but for the rest, no, I haven't really. I don't really know what they can do more. Ueda is already in constant or close contact with them anyway.
Yeah, maybe it's something else. Maybe it's something to do with QE and holdings and whatever. A bit like the Bank of England, resetting their limit on asset purchases to 550 billion, 555 billion. Maybe it's something like, who knows? But nice of them to come out and tell us that there's going to be a tweak without telling us what the tweak is.
Yeah,
which creates more problems for the market to deal with as they play the guessing games.
Yeah, could be that they go. I don't even know what the limit is on their JGB buying, because the Bank of Japan can do unscheduled JGB buying anyway. Maybe they want the Bank of Japan to go back onto the longer end.
Yeah.
Could that be it? But that would be a very, very official change if that would be the tweak. I'm not sure they want to go that far.
No, I think I'll have to go and have a reread of the actual accord to see what's in it that they might be tweaking if it says actual numbers or whatever. But anyway, let's hope we get something out. Right? Yeah, 2013. Yeah, but she has to be careful, Katayama, because she's obviously coming across as a very nervous person regarding the yen. But you can't be dropping lines like that you're making changes to accords and whatever without giving the market what it is. As I say, just invite speculation.
Yeah,
and
we're seeing it right now.
Yeah, the way the market's acting at the moment, it's speculation that it's not going to be good. So she's sort of digging herself a hole, and if she's going to be in this job for a while, she needs to be careful of that as we bust
exactly.
into
those kind of comments only fuel speculation. And Fred, the Bank of Japan is not the ones who handle the FX really. If Japan decides to intervene, it will be coming from the MOF. Okay.
Yeah, that's the way intervention works, Fred. It's not the Bank of Japan does the action. The Ministry of Finance gives the order. That's the way it works. Right, anyway, let's move on. As we can see, dollar yen is breaking up through 156 now. So we are perhaps picking up a bit of speed. So we need to be careful as far as the intervention threat goes. Over in Down Under, we had a bit of data out, some PPI data from New Zealand coming in a little bit softer than expected. PPI output unchanged over the last quarter. Input a little bit softer, but still a positive 0.2. In Australia, we had wage price data for Q3, which all came in pretty much unchanged. That it's not going down will be perhaps what's more concerning for the RBA. Bank of England's Peel says the BOA is finding its way to withdrawing policy restriction. Says we are in a series of finely balanced decisions. Says Governor Bailey is between two broad camps on the MPC, but those camps are not hardwired in conflict. Talking about splits and stuff. He says the idea that the MPC is completely split is not accurate. He says we should not lose sight of inflation being above target. He says he's seeing an easing in the UK labour market. He says wage growth is still substantially above what is consistent with 2% inflation, given the weak productivity. He won't be. He may or may not be heartened by the CPI data that we got from the UK this morning. Both numbers came down as expected, although headline CPI didn't come down to the 3.5 expected. It came in at 3.6. The core number came down a pip as expected to 3.4%. There's a bit of negativity in the PPI data as well. Input prices seem to be coming down. They fell 0.3% on the month and were a lower 0.5%. However, output prices were flat, and that number jumped in the year-on-year number. So input costs may be coming lower, but the prices being passed on down the line are still staying steady or indeed rising, which puts pressure on the consumer, although it is good for businesses on the margin front. Now, we're having this discussion because the market has ramped up its cut probabilities for the December Bank of England meeting. But there is a case to listen to Peel to say that CPI is still well above target. And if you look at this chart, it's not nosediving any which way. This is the problem with the UK. We always have a sticky inflation problem here, and that is not going away just yet. As you can see, yes, we may have peaked just below 4%, and we've had a little dip down, but we're not seeing a trend like we saw in this sort of phase, and that's what they need to see. So it's not a foregone conclusion that inflation is going to continue down. Could well do if Reeves manages to sink the economy and harm spenders and businesses even more. That's probably when you'll see inflation coming down, because activity is dropping and everyone's cutting prices to try and stoke up business, which is not a good environment for that anyway. So yeah, I think, I don't know what you think, Kay, but that inflation on its own does not scream they should be in a meeting by meeting cut cycle.
No, absolutely not. But as you say, I mean, living with higher inflation doesn't mean the central bank can't cut. I just one observation on this is used to be important. I'm not sure whether that is still important right now, but to keep at least a slight positive real rate. But now, okay, you can argue that the yields in the gilt market are above the inflation, but will they want to keep a real positive rate? The Bank of England, SMB doesn't care, but I don't know what the Bank of England wants to do. In that case, they are a bit trapped because they can't do more than 0.25%. Now, on the other hand, they will know what the budget is and have nearly a month to see market reactions before they meet again on the, I think it's 18th or so of December. I think the next Bank of England meeting, or the last one of the year.
18th. Yeah.
Sorry?
Yeah, 17th,
18th. Yeah. So they can still do a how did the Fed call it? A strategic or a defensive cut or whatever. I think that's quite on the cards still, that side. But you're right. I mean, inflation wise, if they want to keep some positivity in the real rates, they can't really cut a lot, right?
Yeah. And yeah, that's absolutely right. You know, the Bank of England have only one mandate. It's not a dual mandate like the Fed. It's an inflation mandate. But the main reason we already started tipping more dovish towards December because of the recent jobs data and other data as well. So that's one reason why we're heading that way, that they may look more at what's happening in the jobs market and the rest of the economy rather than inflation. But yeah, I think they cut. I think it might be another close one if they do, and if it's a wide one, i.e., 7-1 or 8-1 or 9-0 in favour of a cut. I don't think they will be following up with another one so quickly afterwards. So that's what I think they might do moving forward. Right, let's move on from those clowns anyway. Well, I say move on. We move on to the other clown, Reeves. She is apparently going to shield small businesses from any tax rises, which is partly good news. But if she's shielding small businesses, it means large businesses are going to get it up the arse. So, take with one hand, give with the other. We had some data out from the US yesterday. This funny ADP thing, another negative. Don't ask me what we do with that. I still can't get my head around what that number means in terms of the overall picture, but it's a negative nonetheless. We did get factory orders out and durable goods, all these numbers from August, coming in pretty much as expected. I think the only thing to take from this, Kay, is that even if it's old data, there's still no disasters in it.
No small negative, no disaster. Could be exactly what the most Fed members were saying, right? Is a stagnating job market, no hiring, no firing. Could just be that, But it's a bit of a tough read on the implications that it may have for dollar or bonds or whatever. I don't think it can be really good, but yeah, then you have the it's not a disaster approach, which is equally valid, right?
Yeah, I mean, I think if we've sort of caught up with the data by the time we get to the FOMC, maybe they drop the September, October durable goods in quick fashion, and it's still not showing any disasters. Then I think the market's going to start to look a little undovishly towards that December meeting because they'll say, well, there's been nothing even during the shutdown that suggests the Fed should be cutting, but obviously the jobs numbers are going to make the final decision. But the market will move on all the data or reprice expectations on all the data depending on what it does. We've got the NAHB housing market index, which improved by a point to 38. So again, another green number there. Fed heads were out and about. Fed's barking, says there's still pressure on both sides of the mandate. Now he's speaking a bit opposite of what Waller said yesterday. He says he's not hearing that firms are actively planning further layoffs, where Waller said he was hearing that. So different regions, different views, it seems. Barkin says the overall sense is that the economy remains very healthy. He agrees with Powell that a December rate cut is not a foregone conclusion. President Trump has apparently started interviews for the Fed chair. This is out of the final 5. He says he thinks he already knows his choice for the Fed chair, and we may go a standard way on the pick for Fed chair. Treasury Secretary Bessent says Trump will sit down with Fed chair candidates soon. He can safely say he will not be the Fed chair. And that Trump is going to meet 3 of those candidates post-Thanksgiving, and we may have a decision by Christmas. Kay, what does he mean going a standard way? Does that mean he's not going to pick someone who hasn't been in the Fed before?
I would suspect that that would mean it. I mean, that would be the logic anyway. So yeah, we have to look at the central bankers. I'm starting to have the impression that Waller is maybe pushing up towards the top end of the list. I don't know about you, but he definitely speaks Trump's language, right?
Yeah, I'm just trying to see who's the only one who hasn't been through the Fed. Is it Hassett? Because Kevin Walsh is a former governor.
Yeah.
Bowman, Waller,
Yeah.
Ryder.
I don't think Bowman is top of the list, to be honest.
No. Was Ryder had anything to do with the Fed, or was it him and Hassett who are the sort of Fed outsiders? I can't remember. Just having a quick look. Yeah, he's been involved in government, I think, Ryder. So maybe those two are out the running. If he's going for a standard pick, Ryder and Hassett off the card. So it's going to be perhaps out the former or current Fed people. We shall wait and see.
Yeah,
Yeah,
well, asset has been there in the 90s, apparently. I've looked it up as well. As an economist in the Division of Research and Statistics, but
yeah.
he hasn't been a decision maker.
No, it hasn't been in government or anything like that. In government or in the governor's role. So yeah, I'd still class him as an outsider. But
Mm.
yeah, who knows? Trump's going to do what Trump's going to do. We all know that.
Yeah,
But
because he does speak Trumpian as well.
yeah, exactly. So anyway, we may be down to a final three. Don't know who those three are. Right, on other stuff, geopolitics. Russia apparently is going to use similar measures if the EU seizes its assets, according to TASS news agency. The EU taking its sweet time to decide what it's going to do with Russian assets. We should probably know in the next 30 years whether they're going to do something with that. And a bit of a warning from the UK Security Minister saying that intelligence agencies are warning that China is attempting to recruit and cultivate individuals. You could get your tinfoil hat on and said that the Cloudflare issue that we had yesterday could have been down to shenanigans. There's other services offline today, including our mates over at Live Squawk. One of the big streaming services is offline for some reason. As I say, you can put your tinfoil hat on and draw your own conclusions to that sort of shenanigans. Right, that's me done. Unless you've got anything else, Kate?
No, but geopolitics, there's some Russian-Iran stuff going on as well. It's just not going away. We may not have seen the worst or the end of it, at least.
Yeah, so it doesn't ramp up too much. Right. Oh, we're motoring on already. So Dolly N is off to the races again. For me, 157 is the next area we need to be keeping an eye on, one of the big historical levels. As you can see, just from these prior highs up into the 70s, 60s, 70s, we'll probably see a bit of resistance coming into there. And then we need to look at 158 and this prior high up here. Kay, we're picking up a bit of speed now.
Yeah.
Where do you think? Do you think if we're busting 157 by the end of the day, we're in the zone?
Um, we're in the time zone, and we've been on every day we talk about that, but we just don't know how fast Katayama will react, or whether she has another notch or two of warnings coming before really intervention. And if there are more notches to come, then we could be trading 160 before. And I'm not saying 160 to be the level where they will intervene, but just the speed of it's picking up, right? Yesterday we were turning around 155, 5.5. Now we are up in the 156s. But if if they have another warning level, we may be close to 160 before they really intervene, and that I still think it would be a mistake. I can't buy yen. I can't sell dollar yen or euro yen because I think they are going to intervene, because we could be looking at a 200-300 points hole before they actually intervene. But I'm just being cautious, because we don't know how she wants to play it, right? Any time is a good time, and maybe some people speculate that they will wait for tomorrow's jobs data in the US, but I wouldn't think so. If I would be in Japan, I would just look at my own currency and not really. Of course, the job market, the job numbers will influence, especially if they are better than feared. But are they going to wait until then? They may be forced actually into action if it's a good number, but. Yeah, as I said, we don't know how fast she will go, but I'm starting to be very cautious, because he's not only dollar yen, right? I mean, all those yen crosses are still big like hell.
Yeah, but it's a bit strange today because it's not dragging up the majors. The dollar seems to be showing a bit of strength today as
Yeah,
well. Well, in as usual in certain pairs, for example, cable, euro, they're all looking lower.
yeah,
Um, it's dollar CAD's up or up on its day's highs. So it's not a straightforward. Usually, if you get a big yen move, the crosses are going to carry the majors up a bit. But this is just looking a little bit washing machine at the moment.
Yeah, because there's a bit of dollar strength as well. I still think it's pre-data adjustment of positions in everything ex yen. Um, it's kind of random, but we have to acknowledge that the dollar is actually doing pretty well. Take away the metals because that's a completely different affair, and even risk is trading extremely uneven, right? If you look at Aussie, for instance, yesterday we had a bit of spikes. But they can't hold around 65.20. Now we're back around 64.80. But then the rest of the, as you say, euro dollar and cable are coming off. But then Aussie stops. Dollar makes that's coming down. I mean, it's extremely uneven, and that's what pushes me to think that we are really in pre NFP mode, adjusting positions. I Yeah, and I'll have a look at gold because I have a little bit of a theory why it is reasonable to expect it to remain bid despite the dollar being bid, and it has to do, I think, with the risk of interventions also.
Yeah, I mean, as the gold dollar correlation been on for a long while, that thing's gone up, with respect to what the dollar's done a lot of the time.
Uh,
If you look at where we are versus a few months ago and what the dollar's done generally, yeah, it's I don't know. It's not a correlation that I have much faith in at the moment these days. One pair,
correlations are
yeah, go on, mate.
correlations are good for one or two sessions, and then they reverse, or you just put them in the bin.
Yeah, exactly. You can look at oil and dollar CAD. That's been a wonky one for quite some time now. Aussie Kiwi, I'm keeping a little beady eye on because we might be going up a bit again. I'm watching this one because I'm going to look to see there could be a case for having a little short here actually, just because we had this point that we made a high, came back to it, just found support there, found resistance there. We're hitting it again, but I'm really interested to see from perhaps a longer term perspective what happens if we get a test up here again, because that's a big old level into that 116. And if we hold there again, I think I'm going to have another little go on the short side of that one. So I'm keeping a beady eye on that one. Yeah, dollar mex, that's 1 minute we're up tested 1850, and now we're going all the way back down again. So I'm still interested in maybe having a little look down here at the bottom of this range if we see it. But wait and see what happens with that. Not a lot else I'm looking at the moment. You still in your Euro Swiss?
Yes, sir. And I just saw what Ali was saying there. Ali, if you would have listened to the show, and I'm by no means claiming that I know exactly what's going on because people are speculating that SMB is in as well. But yesterday, and even beginning of the week, I was talking about this US Switzerland deal, and it just feels a lot like a mini US Japan deal to me. You lower the tariffs like we have seen with Japan. They were running at 15, maybe even 35% for the cars. Everything has been lowered to 15%. Look at Switzerland, they were running at 39%. It seems to be a blanket 15% now, pharmaceuticals included. And then Japan promised to invest $550 billion, which is a lot larger than Switzerland, but then Japan is different economy as well. Switzerland, according to the US still, promised to invest $200 billion into the United States. That really looks a lot like a similar deal to me. And I think that the U.S. administration is really taking that U.S. Japan deal as a blueprint for whatever may happen, and then looking at maybe what's upcoming with Canada. Maybe they are going to discuss something similar, but Yeah, and dollar Swiss is bit because the dollar is behaving better as well. But that's, I think, the main reason why Swiss is a little bit under the curve, because the market has seen what the deal has done, with the Japanese yen. And take away Takaichi, okay, I mean, we would have been maybe at 152 instead of 156, but we would still be lower in yen terms, and because of that deal, because of those big investment promises. And that's the I think one of the main reasons why Swiss is weakening. And again, I don't know whether S&P is helping this move or not. It's their modus operandi is usually just to sit on the bit to slow moves, but it's undeniable that from below 92 in Euro Swiss, it's been going up. So I don't know, but we will only know if they helped this move start of next month, when they will divulge their FX reserves. Yeah, but I think the main reason is, and that's why I'm long Euro Swiss. The main reason is that Japanese deal. But there's a bit of a yeah, exactly. There's a bit of a level coming up, and that's around that 90. I've got it around 93.15. I didn't cut the prior top. Yeah, over there, that line there. That's where I'm looking to potentially take more off, and then see where we end up.
Yeah, I think this point here, that line merely, if anything, not if you trade it or whatnot, it's up to you. But merely because this is a series of lower lows,
Yeah,
or sorry, lower highs, and we've also got a series of lower lows as well. So if we're
yeah,
breaking above there, that would be still my key area, that 25.30
yeah,
level, because it's prior resistance and we couldn't get above that last time. If we're breaking above that, then we are potentially breaking this mini trend that we've had
yeah.
since middle of August, late August. That will be significant, I think. If we banging our head on the line, not going up, then that keeps, I think, the downside pressure in play for this one.
Yeah. Yeah, that's why I'm taking profit, well, further profits ahead of that line,
Yeah, yeah,
and
sounds
then see
sensible
if we
to
break
me.
or not.
Yeah, sounds sensible to me. Cable's looking a bit iffy at this 131 as well. We've had 131, 130, yeah, 131. I'm getting myself tied up now. We have had previous breaks here, but it got back above there pretty quickly. We've had a couple of nibbles. I think if this one goes again and starts holding below 131, I think we're probably going to see another move down to at least the 130 area. Now, if that's going at a bit of a faster speed than euro dollar going the same way, then we could well be seeing euro sterling going up and having a look at that prior high and that zone 60s, 70s. So just keep an eye on that one. I'm not going to do too much, but also this euro dollar, this 115.70 is just a bit of a sticky level as well. Again, if we're breaking and holding, we're going to see lower numbers. Right, mate, I'm going to knock it over to you because I'm sure you've
Yeah.
got more in depth views. There we go.
Okay. Yeah, I think, well, you've already showed a lot. I agree on the euro dollar. Got a bit of a line here as well. Um, and that's around that 60 zone. We are not far. As I was saying, I still think it's pre NFP stuff. We are it's that's about halfway of that bounce that we saw. Bit of a trend line here coming in as well, but always take those lines with a pinch of salt, especially ahead of those data. We could see a bit of a move down to 40 if it continues. It looks like a bit of a, yeah, probably. You know what? I think that the yen may be helping actually this move, because you it's pushing up the dollar, huh? And maybe the rest is moving a bit in sympathy. Yeah, so but I still think tomorrow is going to be the biggie. And if you look at something topside, exactly where we were, um, I need to zoom in here, exactly where we were and where we topped out. last week in the euro dollar. We've got a convergence there as well of the 50, 55, and 100 daily moving averages, just around 116.60. That's going to be a biggie if after the numbers tomorrow, but we will revisit that tomorrow. So quickie on the metals. We had this little short-term trend line, lower highs, lower highs, lower highs, and then it's broken yesterday, moved above, retested it. I really the ideal retest in Asia, and from there we moved higher again. Now I said and that gold. I've actually bought it yesterday around here-ish on well after the spike done around 40, 48 yesterday, and I sold the rest out this morning. This thing, if ever there would be interventions in from the Bank of Japan, from the MOF, from Japan, I mean, I think this one could as a reaction, as an extra reaction to if you can't buy much else or whatever, could see an extra spike higher. I think this could be one of the results from Japanese interventions that the market is again, no, if you can't be long dollar yen, you need to do something. You need to do something with your money, but an intervention creates a uncertainty, right? And stuff like gold, in my opinion, is one that is still sensitive to uncertainty. So this one, on in case of interventions, could shoot higher. Just my opinion, okay? It's not official, as they would say if I would be a strategist in a bank, but it's just something I think that may happen. Okay, so the higher it goes, the dollar yen. If we see dips again down to that zone here, I will be tempted to leg into a little bit of gold again, just in case that Japan intervenes. That's just my opinion again. And then that silver. Yesterday, I was wondering if we could have a remake of this here, 47 and a half falls break and up. Here we go, 50 falls break and up, and we are already again at that 52 and a quarter. I guess still supplies and stuff. Um, and it's been it's really but it's really keeping the positivity here as well. Yes, it can be violent. Yes, we can go back down there, but if we see it back down there, I'm going to get pretty interested. Obviously, if we start to break higher, we're going to have to look at different levels, and I think I have to go onto the weekly. And the next level above, as you can see here, just on the top of my chart, would be 60 bucks if that thing breaks, okay? So that to bear in mind. Ryan was talking about the Aussie and the Aussie Kiwi. The Kiwi is not looking good once more, okay? We had that prior zone here, 65.30, which held a number of times. We're trading marginally, but we are trading below. As I gave the update last week as well, that 65.80 figure had to go for the Kiwi to move on. It did not. It's still looking fragile, and that is obviously pushing your Aussie Kiwi up as well, because the Aussie is trying to stabilize in around that 64.80 again. If we would get a half decent number on tomorrow's NFPs, I think this one could go for the break here of the prior one. So this is one, as you know, we always look at which currency could do better or worse for different scenarios when data come out. This is definitely one that would do worse if we get better US data tomorrow, I think. Okay. Nuno, correlation, Aussie and XAU and GLD is +1. I don't understand what it is. I'm sorry, Nuno. I don't understand. I mean, GLD, is that like futures on gold or something? What is that? I'm not sure what you mean there. Gold and ticket GLD. GLD is gold, right? Is another ticker for gold, right? I don't. Silver and gold. Oh, it's the ETF. Well, yeah. I mean, if the one goes, the other one should go as well. Okay. Um, yeah. Well, yeah, maybe. I'm going to leave that there because I'm not looking at the ETF myself. But I mean, there should be some logic in there. Will you buy dollar yen on a dip? It's gonna have to be a serious dip, and if it doesn't come from interventions. Okay, if it comes from interventions, obviously we can trade 150 or even below. But let's say if in a natural way, look, I'm looking at this zone here, 154 and a half up to 154.80. That should be somewhere on a natural decline, be somewhere where it's beat, and that could come tomorrow if the US number is crappy. We could have a severe reaction in the dollar and then trade it down there. Okay, but obviously in case of interventions, all bets off. Yeah, um, and then we will see where we end up because the problem will remain the same. The fiscal looseness will remain the same. Okay, so we will see where interventions lead us if we see interventions. With that, Ryan, I'm going to give it back to you unless there's something else going on. I don't know. I didn't understand Ali's stuff in the Aussie. I must be wrong with figures and things.
That you done, mate?
Yeah, I'm done, Ryan.
Yeah. Oh, sorry. Thank you very much. Right, yeah, we'll call that the end of the show today. Nice early-ish one for once. So thank you everybody for coming to the show. Take care of your trading later on through the rest of the day. Join us on Face later, and we'll be back as always tomorrow for our impromptu NFP day. Looking forward to it.